Yona, as we said, you're a cost segregation specialist. Why don't you start off by telling us exactly what cost segregation is?
Yeah, exactly. We always got to get that weird name out of the way just to kind of figure it out. I mean, so before we even get into that, like, it's a tax saving. You guys mentioned about how you don't have the double taxation with Canada. This is, and people have heard real estate has tremendous benefits, right? There's the equity, there's the wealth building, but the tax incentives, the tax advantages really boil down to what we're going to be talking about today, which is cost segregation. I mean, this is the number one key in creating wealth and paying little to no taxes by doing so. So cost segregation, it's again a weird name, but it basically means it's an advanced form of depreciation. Okay, it's just segregating the cost of depreciation. So let's just take a step back. What's depreciation, right? What is that? I don't know if you guys have this in Canada, but in the United States, the IRS, the Internal Revenue Service, has in the tax code something that says when you buy an investment property, any type of investment property, whether residential or commercial or business property, as long as it's not your personal residence, any type of property, you get to take a tax deduction from your income tax called depreciation. Now, it sounds like the word, right? Depreciation means something going down in value, right? That's not really what it's about. It's based on that, but it's just a tax deduction based on that principle. So when you buy a building, let's say you buy a property for $1 million, okay? You can now take that $1 million as a tax write-off, right, over a long period of time. And that's called the depreciation deduction, as if it were that it was going down in value every year. So you can take that amount every year as a tax deduction as if it were actually going down in value. It doesn't really make a lot of sense from logic. Like, why would you do that? Because it's not intrinsic to the property, it's really for the investor. So if you buy a building today, right, you start over that depreciation schedule, you can take it, new from today. But that's what depreciation is, okay? And it's a huge thing. It's a great tax benefit and probably one of the best tax benefits that are out there until you figure out what cost segregation is, okay?
Nice.